So let's start doing our first review in your Edgewonk trading journal. And later we will go through all of the different charts and all of the different features one by one. But when you just want to get started and you want to get a very great overlook over your trading and you want to see where are your strengths, where are weaknesses, and where should your review go, we have an amazing feature that is called the Edgefinder. The Edgefinder is a proprietary algorithm that runs every Sunday. It focuses on the 6 core areas of trading performance and trading behavior. It covers all important aspects of your trading, and it gives you an automated review over what really matters for you. So this is a very great starting place for your trading. So when we are in the Edgefinder, you can see we have the 6 core categories, and at the right you see a general review or a rating for each of those categories. It's a good idea to start with the categories in the Edgefinder that show either a red or a yellow rating, because there is some room for improvement for you. So for example, let's take a look at the trade management. Here we see a red rating, and once you click on the trade management category, it opens a sidebar with additional inputs. So here we see the trade management, and this is something that we've seen in the last video, which we called R gained or R lost by managing. And here we can see that this trader is losing 14 R by actively managing the trades. This means that currently this trader is leaving quite a lot of performance on the table and he is mismanaging his trades. So this is a very good starting place for the trader because he knows there's a lot of room for improvement for this trader. Let's double check this, and we go to our chart lab and then to the trade management graph. And we can see that this red line, R lost by management, is below the 0 line, indicating that he is losing money by actively managing the trades. When we hover over here, we can see minus 14 R. This is what the Edgefinder told us. And looking here at the top, we can see the potential performance is above the actual performance, further confirming this insight. You also find the Edgefinder here on the left. We go back. We can also look into the risk management. This is an orange rating, and we can see the return to drawdown ratio is 1.54. The return to drawdown ratio is very important because it helps you understand the return that you're realizing, and it puts it into relation to the risk that you are taking with your strategy. So the higher the return to drawdown ratio, the better it is. And if you see that the return to drawdown ratio is declining, it means that your risk is increasing and the reward and the returns are becoming smaller. Underneath it, you also see the development over time for the return to drawdown ratio. And you can see it's for the last 365 days, 180 days, 30 days, and the last 7 days. And you can see over the last 365 days, the return on ratio is actually quite large, but then it is decreasing significantly. So it shows that there are some issues for this trader. The risk is increasing, maybe it's not having as many returns, and that is also here a warning sign for this trader. Let's look at the performance outlier, because this is the last red section of the Edgefinder. And what we do here is we look at custom statistics, we look at your trading setups, and also at your comments. And it is called outlier because we are looking here for tags and comments that really stand out, that are significantly larger than your average comment. So here you can see you have one exceptionally good custom statistic. So when he's trading the 5-minute time frame, he is making the most money. When we look at the worst losing custom statistics, we can see that we have one for stop logic, and he has 2 entry style custom stats that are not working out for this trader at all. We are looking here at the average loss, not at the total loss. So this is really giving you a very important insight into what is really working exceptionally well and where are your greatest struggles in your trading. And the same is true for the setup. This setup is his best performer. This setup is his worst performer. And then also here we have further comments. So this gives you a very quick idea of where your struggles are, where your strengths are, to just give you an idea of where you are in your trading. We can also look at the other ones. Let's start at the top, profitability. It's green. When we look at the whole trading journal, you can see this trader is currently very profitable. That's why his profitability rating is green. Here you get an idea of your expectancy per trade. So per trade, he's making 0.1%, which is a good metric. The reward to risk ratio is 1.4 over all of his trades, and his win rate is 47%. The combination of 1.4 reward to risk ratio with a 47% win rate is a very good combination, and it gives the trader really good profitable results over the long term. In the category reward to risk ratio, we show you the required win rate to break even. So based on the 1.4 reward to risk ratio, mathematically, if you have a 41.8 or lower performance or win rate, you are becoming break even, or if you go under 41.8%, you start to losing long term. So this is a very good indication, and it helps you understand and interpret these metrics even further. Same is true for the win rate. Based on his 47% win rate, he needs at least a 1.1 reward to risk ratio to stay break even. But because currently his reward to risk ratio is much higher than the 1.1, he is profitable. The true system edge is another very important metric, and it's absolutely unique to the Edgewonk trading journal. What we do here is that we only look at the system of the trader, and we take out all of the trades where the trader broke the rules, because they are actually not his trading system. So here we get a very good understanding of how profitable the system is when the trader is following his rules. And this can be a very great confidence boost, especially for struggling traders, when they see their true system edge is profitable and positive. Although overall their broker account might be negative, once they see that their system is profitable, but they are the ones causing the large losses and the underperformance, this can actually lead to a lot of change in the trading behavior. So now all you have to do, and I know it's easier said than done, all you have to do is start trusting the system more and start avoiding more and more of those trades where you trade outside of the framework of your trading system. The difference between the current performance and his true system is what we call edge leak. So this is what he's losing by breaking his rules. And then if you want to get further breakdowns, here we have the mistake impact analysis. We look at all the 4 different common categories that we have: pre-trade, entry, exit, and trade management. We look at all of the trades, the win rate where the trader is breaking the rules, and how much money they are actually losing by breaking their trading rules.